Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market. So today's the kind of day where looking at the daily time frame, it's very clear. Daily inside bar bear break means a pullback, and the break of 289.65 was the level we were watching for first thing. But if you look on the shorter term time frames, it wasn't that simple, just in the sense that we saw a lot of choppy action this morning before the bears finally saw convincing follow through the second half of the trading day. So the top of the bounce on the daily has now been set. We have the low of the dump, top of the bounce, 293.62, and now we're scouting for a daily higher low to form compared to 281.72. In my opinion, that's still the most likely scenario because of volume. The bear volume today was not impressive. If we had seen more bear volume, more than average, or if we see a solid red day tomorrow, then the odds are going to shift to the bears. But where we stand right now, if we see a green day tomorrow, I'm going to call it a 50-50. We essentially have a support level and a resistance level in the short term tightening range. If resistance were to break, we have a daily trend change, and we're looking back at the all-time high. If support breaks, then the dump, of course, is not over, and then we're still looking on the weekly time frame at 273.09 as the most important weekly support level. That was our higher low. So as far as the short-term time frame goes, here's what I'm talking about with the 5-minute time frame. You know, if we saw a bear break of the low of Friday, and this is the action that followed, it would be very easy. It would be a very easy trading day looking in that direction. But we saw the low of the day break. The QQQ tech sector and the financial sector XLF did not break the low of the day down here. So we knew not to believe that the SPY bears were going to get any follow through if the major sectors were not hitting their lows. We bounced and hit the high of the day, then we hit a low of the day, then we saw a solid bounce. So all this action makes things choppy. And if you went bearish on the daily inside bar breaking bearish with common shares, it's much easier to sit through that choppy action than it would be if you're trading options. Because this action, if you're getting into puts, is going to erode time decay, or I should say erode the premium of those options due to time decay. And again, it was only really after 1 p.m. where the bearish conviction showed up. So to indicate that the daily higher low has formed on SPY, we're going to have to change the hourly trend. And that's not just going to happen overnight. We're going to see anything under 290.03 as an hourly lower high, and if we're going to change this hourly trend, it's going to look something like this, where we bounce, reject with a lower high perhaps, pull back, look for the low of consolidation to hold, and then change the hourly trend. That's if we're going to set a daily high or low. Right now, the bears have the momentum in their favor. All they have to do is see a red day tomorrow, and if we get a red day, then the odds of a bear break of this daily tightening pattern will increase. So that's what we're looking at. Tightening daily ranges is the most likely scenario. I talked about equilibriums in the market videos either this weekend or last week. After high volatility, tightening ranges, most likely scenario. So looking at IWM, it's a more significant pullback. And again, I'm always looking at the distance to where we stand compared to support and then compared to resistance. So in this instance, I'm looking down at support of 146.21. So we're about $2.40 above support. And as far as resistance goes, we're $4 below resistance. So we're much closer to a bear break than a bull break, and there's no indication of a higher low being established right now. So if we're looking at SPY and doing the same thing, support at 281.72, we're $6 above support, and we're $6 below resistance. So we're in the middle of the range. So that tells me it's a 50-50. It's anybody's game as far as how this pattern breaks, whereas IWM is weaker. And this is important if you're doing individual company analysis in a sector. If I'm looking at the tech sector and I'm looking at Amazon, Apple, Microsoft, Google, Netflix, all these names, I can compare them to each other and I can say this is the strongest tech sector name, this is the weakest tech sector name, using the little details that I just showed you on comparing IWM and SPY. So for QQQ, bulls have plenty of space to form a higher low. The low is down here at 183.51. High of the bounce is resistance at 188.32, and we are currently $5.15 above support, and we are only $4 below resistance. So this chart is even more bullish. So if we're ranking the odds of how these daily tightening ranges are going to break, QQQ most bullish, SPY in the middle, IWM is the weakest. XLF would go in the weaker category. The low of the dump, 26.24, high of the bounce, up at 27.31. We are currently 40 cents from a bear break, and we're 70 cents from a bull break. XBI, right about the middle of the range, so middle of the road here. We've got our low, high, scouting a higher low. The one thing is we don't have any indication that our daily higher lows have been established yet. So for that reason, bears still have the short-term momentum in their favor. It's up to the bulls. The burden of proof is on the bulls tomorrow to change the hourly trend and give us daily higher lows. XLV, also very strong comparative to the other names. We have our low, high of the bounce, and we're scouting a higher low compared to 88.20. The VIX gave us the daily higher low. So again, looking for the tightening ranges, even though the VIX here is not traded with shares bought and sold, as we see with individual stocks or the sectors, it still behaves the same as far as our high of the bounce. Higher low is set. The daily inside bar breaking bullish was 1940. So the bull signal was at 1940. And if we're looking at the individual ETFs, what kind of upside potential was there? Inside bar break was 1948. And we ended up going about 10% from that signal. And now it's all about the resistance level, the high of the bounce. So back to the VIX, high of the bounce is up at 2480. Anything under that is a lower high. And so what we're watching for the next couple of days is, are we going to form a tightening range, which in my opinion is the most likely scenario, or are we going to see bear volume pick up in the markets, fear pick up in the markets, and just a straight move to higher highs? Tomorrow will be very telling as to which is most likely. Gold. So gold broke the 4-hour tightening range that we were watching, highlighted over the weekend, how we hoped that we stayed in this pattern. We actually had a bear break before the market opened with no follow through and then a bull break. There is a red flag. When you see that kind of upper wick and the lack of follow through on that bull break, that was a bull break that lasted 5 minutes and then gave it all back. And now we're fading. So there is a red flag. It's a continuation move, but it's not comfortable. Bulls must hold 1487 to keep the 4-hour uptrend intact. We do still have 4-hour exponential support. We do still have hourly uptrend, 4-hour uptrend, daily uptrend, weekly uptrend. So again, the burden of proof is on the bears, but they're starting to show us a little bit of a crack in the bulls' armor. And if the bulls can keep this hourly uptrend into tomorrow morning, they'll still be just fine. What was notable today, we'll do silver just quick. So silver, 4-hour time frame, only broke one resistance level, but it's almost a double top. I would still consider this to remain in an equilibrium for silver. High, low, lower high, double bottom, double top essentially. You broke resistance by 2 pennies. That's not convincing. So 1679 is key support, 1714 key resistance, and I'm going to treat this like an equilibrium into tomorrow. And the XAU XAG chart, which is going to show us who is stronger in the short term, gold or silver, just sideways trading, no information. I'm watching the broader range between 87.33 and 89.85. So multiple daily inside bars, real tight, but the broader range is what's most important to me. What was most notable today out of the miners is the fact that the miners were weak. And you look at the miners on the daily time frame, we closed at the low of the day, and we're almost at the lowest price we've seen in the last 4 days. And you look at gold, and that's not the case at all. And gold and the miners have been linked very closely, where it's clear that gold is the most important underlying factor, and that has changed today. Today has changed more notably than in the past few weeks. Look at where gold closed, and look where the miners closed. It's almost like today, the miners said, well, we're paying attention to the S&P 500 now, and we're going to start tracking the S&P 500, and that weakness dragged the sector down of miners and started to disregard gold. So it's, in my opinion, the fact that that gold move was so quick that it didn't really allow for correlations to behave as they have been. So I did play the NUGT oversold bounce. How did this trade setup play out? So the 4-hour time frame was an equilibrium. I know 38.30 is key support, and I looked and I saw weakness in NUGT, and then a member posted things are getting real ugly. and he posted that things were getting real ugly right about here. So I said, okay, 38.30 is the support level I'm watching. The 5-minute RSI is in the teens, and the 15-minute RSI is down in the low 20s. I'm comfortable entering and beginning to scale into an oversold bounce. So right when I saw that, the first thing that I did is I looked at the 2-minute time frame, because I want the 2-minute chart as extended as possible if I'm looking for an oversold quick flip. And at that point, we had dropped $1 in 10 minutes with no bounce attempt. If this pullback right here had looked like this, with little lower highs and lower lows and RSI levels cooling off, I'm not interested in an oversold bounce play. I love that flush. I want things to get as extreme to the downside as possible. I want to see all the bids get taken out, and then when the bounce happens, that's when we get a V-shaped recovery. We don't get V-shaped recoveries when we're stair-stepping down. We get V-shaped recoveries when we dump and then bounce. So I entered as soon as I saw this 2-minute time frame, entered market order for half the position I was willing to take at 38.30. I sat there for what felt like a couple minutes, but in reality it was probably 25 seconds. And I was waiting, are we going to drop a little bit lower for me to enter one more entry? We didn't. I said, all right, good enough for me. In the second position, 38.35. So my average is 38.33, and I'm just looking for a quick oversold bounce on the 2-minute time frame to exit half of my shares. At that point, I had not traded anything today because I said, well, SPY gave us the bear break. It's choppy. It's not clear. Not the kind of day I'm looking to be very active trading. But this trade came to me, and I love oversold bounces. So I was just looking for a quick move. I sold half of it at 38.55. So essentially a 22% gain. And that's my daymaker mark. 20 cents is a daymaker for me on this because I took a fairly big position. Reason being the 4-hour support was right there, and we were very extended when we tested the 4-hour support. And I took half of my position at 38.55. From there, I can do two things. I can lock it all in and have the day maker and be done for the day, easy peasy, and that trade would have lasted about 4 or 5 minutes. Or I could set the second half of my position at break even and hope for further follow through. Now there's that spike on gold being shown on the miners, and in hindsight, had I put my second stop loss at break even 38.13 and held on for a bit longer, it would have been a multiple day maker. But I decided to take my day maker shortly into this bounce and be done with it. And I don't regret that decision at all, especially because we dropped down back under what my average would have been by the end of the day. Missed that spike, missed that opportunity, but again, as long as I'm getting my day makers, big picture, I'll be just fine long term. And again, it's long term that I'm looking towards here. I'm looking to be conservative and keep stacking away gains day after day. So that was my trade on NUGT today. Oil. That's actually NUGT, what we're looking at into tomorrow. Anything under 40.73 is just a lower high. 37.51 is support. And we are seeing daily consolidation underway. And again, how gold responds here is going to be very important as to what I expect from miners. If we wake up tomorrow and gold is down around 1,500, we're going to be expecting a decent further. It's pretty much the correlation with miners right now favors the bears. Because if we're not responding to gold's strength and SPY is showing some weakness, if gold pulls back at all, it's only going to add further downside pressure on the bull miners. So I am watching the bear miners for the rest of the week for the potential of just short-term bounces playing out. Key resistance 724 on dust. And if that level breaks, there's a lack of clear daily resistance until 1009. So it's something I'm keeping an eye on. Let's actually see if you could draw a falling wedge here. Falling wedge is a pattern that shows bear exhaustion, where we drop to lower lows and don't really get significant follow through. So it's not a great wedge, but it is worth keeping an eye on. So I'm watching bear miners from here on out. So oil, nice follow through. Again, every time we see continuation, the odds that this weekly chart can stay in this tightening range increases. The range here between the low of 50.51 and the high, which is our lower high, of 60.91, let's call it $10.40, because that's what it is. 520 is the halfway point. 520 off the low is 55.71. So we haven't quite made it to the midway point, but we're almost there. Right back smack dab in the middle of the equilibrium. We're expecting a temporary lower high on the daily to be set sooner rather than later, losing the 4-hour uptrend is an indication that the daily top of the bounce has been hit. Anything above 53.55 keeps the 4-hour uptrend intact, but in the next day or two, we're scouting a daily lower high, and if we're going to stay in this weekly pattern in through August, we're going to have to change the daily trend this week. And it's going to get interesting on oil, end of August, early September. Natural gas, still don't care. 5 days, nothing happening. Bears still in control. Patiently watching the falling wedge on the longer term time frame. I have no interest in anything anytime soon as we're heading back down to the recent low of 2039. Break 234 and I'll start to pay attention. Anything under that's just a daily lower high. So that's where we stand heading into tomorrow. Not sure what the end of the video here is going to be. Nothing new for content, so we're going to dig back into my recent past. And I'll see you all tomorrow. Have a good rest of your day. Do good things. Good morning. One of the ways that I stay one step ahead of the herd is by out hustling them. So every single day I'm waking up before the sun, not by an alarm, but because my body wakes me up, because it's pumped to be alive. And it's looking forward to going downstairs and making content first thing. And I love starting the day and setting the intention of the day of being productive by knocking things off my checklist before it's even 8 a.m. It's really easy to have a very productive day when you're already productive before the sun even comes up. So when learning charts and technical analysis, for me it was never, I need to do this work so I can make money. It was always, I enjoy doing this and money is going to result from it. And those are two very different mindsets to be in, and you have to ensure that your goals are in line with your enjoyment if you're going to be able to do this long-term successfully. So don't forget to do good things out there. Go get productive on the day. We'll see you soon.
Shh, hear that? It's Sunday morning and that's the sound of the herd sleeping.